Hi friends, welcome back. How are you all? I am. I would like to start with this topic on accounting process today. This is not a new topic at all. It is just an additional knowledge for you in the topic of accountancy. So guys, I hope you remember what all we have covered and what we are currently doing. In this YouTube channel, I am currently covering accountancy and mathematics. Both are for class 11 and 12 portions. And also we have covered economics fully. I would like to inform you that the syllabus is basically aimed at CBSE, but any other students can also use. I hope you are enjoying my video, and a humble request, if you are for the first time to my channel, please subscribe to my channel. Also, if you like the videos, please like and please share the videos with your friends so that anybody who wants can benefit from this. And as you know, the new videos in YouTube are fully free and there is nothing you have to pay or anything for this. I will be covering the entire syllabus, but it will not be full-fledged like it will be, but it will be enough for you to grasp the concepts. Now, this is accounting process. We have studied another process earlier in accountancy. In my series, I have covered another process, that is business process. This is not an entity does. A business entity, what it does is coming in the business process. That's okay. Set it aside. Guys, this is a different thing. What do we people do in accountancy? What are we to do in accountancy? This is what more important for us, right? What the business does is important in the perspective of management. What we do is an important for accountants. Right. So, what do we know about the accounting process? From the definition, we know a lot of things. Accounting is the art of recording, classifying, and summarizing. And there is some blah 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 blah. I am not telling that. In the end, interpreting the result thereof. Right. So, what do we do here? First, we will write recording, classifying, summarizing, interpretation. These are the 4 steps of accounting. I would like to tell you that first. Now, how do we go ahead with accounting? Whenever a transaction is happening in a business, the principle of full disclosure states that each and everything should be recorded. No doubt. So guys, you are thorough. Each and every aspect should be recorded. Each and every transaction should be recorded. Now, when I say each and every transaction should be recorded, there are 2 ways of recording any transaction. Let me tell you. For instance, consider a shopkeeper who is making a sale. Don't mind the name and all, who is the customer and all, let us ignore that now. The sale, he is making sale and that person is paying cash. Simple transaction. So, the shopkeeper can take, I got cash, received cash. This is one way of thinking. Because that person is receiving cash. I got cash and the goods went out. But the main thing he is concerned is that he got this much cash. There is another way to think. That is, I got this much cash because I sold goods. I made a sale. There is a profound, more detailed way of thinking like this is, I got this much cash because I sold goods that worth this much, worth some amount, right? Means I got this much cash for selling goods that cost me this much. This is 2 ways. The first way of thinking when he just records cash is called the single entry system. We will discuss that later. Right, first we need to get the basic of double entry system because we are using double entry system. The second way is called the double entry system. Both the complicated or profound detailed way or the short way, both are double entry system. Now what happens in double entry system? Any transaction will be first recorded. And where is it recorded? Where is it recorded? It will be naturally nowadays it is in the internet. It's in the system. We are doing everything in the computer system. But generally, after logic, it will recorded in a book called journal. Journal. What is this book? This is the book which is called the book of primary entry. Means the first every transaction will be recorded in the journal. But now you can imagine how bulky the journal will be. Hi, yes or no? Journal will be very bulky because for a small shopkeeper, even for a small shopkeeper, if he is taking 10 transactions in a day, and if he is working for 300 days in a year, also he will definitely have 3000 transactions. This 3000 transaction will be bulky for that single person to cover. So what is the other option? There is a bifurcation or sub branches of journal which are called subsidiary books. Or subsidiary books or subsidiary journals or day books or any other name. Whatever you can call. These are subsidiary books. What are these subsidiary books? These are journals. They are not any other thing. These are journals itself, but they record only a specific category of transaction. So let us understand this subsidiary book thing. Let us understand this subsidiary book thing. Now the thing is, a person is coming, a transaction, a person is coming. So, and he is coming and asking the ticket counter. My characteristics are like this. I am a cash sale, cash purchase, everything I am related to cash. Where can I go and sit in the train? And he is advised to go to the second AC. Alright, second AC. He is advised to go to the second AC because his cash transaction, he is going to the second AC. This second AC is called cash book. Means cash not only means plain cash, currency cash, it can also mean bank money or anything electronic, right? Electronic or anything cash. In any subsidiary of cash can come here. This is the cash book. Now, there is another person coming. He is saying, I am sale. The ticket master is asking, sir, are you cash sale? No, sir, I am credit sale. So where does that person go? He goes to the third AC. And this third AC is called sales ledger and sales book, not sales ledger, sales book. Besides this account, in combination with the sales book, we can also add the sales return book. Because if any person is cancelling also, this person will be recorded in a different book which is called the sales returns book. Okay. If the sales is returned, if we are getting returns from a customer, this will be recorded in a sales book. Now the question you will be asking is, I am doing a credit sale. It will be recorded in the sales book, no issues. That person is returning the goods back to me. Some goods he is returning back to me. I will record it in the sales returns book. Now, I am making a cash sale. And the person is returning. What will I record? It is made for cash, but it is a sales return. Here, the thing is important. The thing that is important is whether we are reimbursing his cash. If we are giving him back the money he has paid, then it will be recorded in the cash book because it is a cash transaction. But if we are not giving him back the money, then it will be recorded in the sales returns book. This is sales returns. Now, after sales returns comes another person. This person is a purchase. He is not a cash purchase, credit purchase. And this person will be going to the sleeper. And the train is being full, okay. The first two classes are already full and the third class. Now the sleeper. This person is called purchase or purchase returns journal. Similar to sales returns, we can also have purchase returns. When we are returning goods to our supplier, it will be taken in the purchase return book. Similarly, if we are getting cash immediately, if we are getting the money back immediately, we will be recording it in the cash book. But if we are not getting the money back immediately, or we bought the books on credit, see, tell me now one thing, if we are buying something on credit and we are returning it, will that person give us money back? Definitely not, because we haven't given him anything and he is not giving us anything. So naturally it will come to the purchase return book itself. But if we are making a cash purchase and we are returning, that is where the thing comes, whether we will record it here or here, whether the person will go to the second AC or the sleeper. If we are getting cash back immediately, then he will go to the second AC. But if we are not getting cash, he will go to the third AC, means sleeper, purchase returns book. Now, everything is full. These 3 coaches are full. The train is full and the train is ready to go. And the guard is seeing whether it's anybody there. But my God, there's somebody which is coming. Hey everyone, hold on, I am there. Now who is this person and what are his characteristics? Is he cash transaction? No. Is he sales, credit sales or sales return? No. Is he purchase or purchase return? No. Where will this person go? He can't go to the second AC, he can't go to the third AC, he can't go to the sleeper, they are all full. So the person, where else can I sit, sir? And he is given the ticket, the general bogie. And this general bogie is called journal proper. Anything that does not fit these other 3 categories will go to the journal proper. Anything that does not fit these 3 categories will go to the journal proper. But there can be few people who always go in the general bogie. They don't want to go, they usually don't go in the sleeper or third AC or second AC. Such people, usually they prefer the general bogie. One such category of transaction can be adjustment entries. Okay, I am just giving you for anything, means just for additional information, adjustment entry. What are these adjustment entry and where they are used? Everything we will discuss in some later session. So this is about journal and the subsidiary books. Now everything is done in the journal and the subsidiary books and the train has left. Now what do we do next? Every transaction has been recorded. Every transaction has been recorded systematically. There is nothing left. Now what do we do? But we can't infer anything from the journal because even subsidiary books, they are this much bulky. So what do? We group them. Similarly, in AC compartment, we assign coupers or bogies, coupers. Even in AC compartment, we have AC1, AC2. So we assign them into cabins or coupers or coaches. Such assignment or grouping will happen in the book called ledger. Here, the book is called ledger. There, each group of transactions are separately recorded. Okay, they are instead of the bulky journal, each transaction is recorded with similar items. And so there will be a separate section for sales, a separate section for purchase, separate section for everything. But here there is no bifurcation of sales, cash sales and credit sales. All sales, whether cash or sales, will be recorded both in the cash section as well as in the sales section because they have 2 impacts and both the impacts should be recorded in the ledger. So both the transactions will be recorded in the ledger and each section is called account. Many accounts together form a ledger. There will be a sales account, there will be a purchase account, there will be a bank account. Okay. Now when there is a cash sale, this will be recorded both in the sales account as well as in the cash account. This is the next ledger. Everything is done in the ledger also. Everything has been grouped and everything. And some balance will arise, means the net effect will be computed in the ledger. This net effect will be summarized. The process of classification is done in the ledger. The net effect will be summarized and that will happen in a book called the trial balance. Why is it called trial and why is it called balance? Trial means we are trying and balance means the balance of the ledger, the net effect of the ledger. We are seeing if the credit balances as well as debit balances are same. Always you have learned in the accounting equation, both should be same. Asset is equal to liabilities plus capital. So debits is equal to credits. This should always be balanced. We will verify our arithmetic clerical accuracy in the trial balance. We will compute whether it is tally means the same. This will be done in the trial balance. What do we do after the trial balance? This is not enough for us. Why are we preparing accounts first of all? To know the profit and loss, to know the financial position. And how are we going to prepare? We are going to prepare a thing called final account. Final, not account, accounts. S is important. The final accounts have three parts. It is not basically an account or balancing item. It has three parts. It is a presentation oriented item. The first part is the trading account. What happens in the trading account? The result of the principal trading activity of the business. Any entity will have a principal trading activity. If the person is a textile dealer, he deals in clothes, then his principal trading activity will be buying clothes, selling. Right? Anything else is not coming in the principal trading activity. But we will have to make adjustments for opening stock of garments as well as closing stock of garments. And if we are paying wages, direct wages, if it's a manufacturing entity, it will also come here because it is needed to bring the product into saleable condition. Saleable condition into the saleable location. That's also there. Now, there are many other expenses like freight. What is freight? What is freight? Have I told you that? It is something we pay to ferry goods from one place to another. There can be two types of freight. One, we are purchasing something and we are bringing it to our place, our shop. Or we are selling and the customer wants us to deliver and we are delivering the thing to his place of residence. The first freight, when we are bringing something from our supplier to our shop, will be a part of trading activity because it is required to bring the item to the sale location. But the other thing, when we are going to deliver, it is not a trading activity. Do you know why? Because it is selling expense. It is out of, means even without that expense, the sale will happen. Yes or no? Even the basic thing is that it is required to bring the item to the saleable condition to the location or our shop. This is about trading account. Anything else, all other expenses and revenues will be recorded in the profit and loss account. This is the main item, profit and loss account. And the first item here will be the net effect of the trading activity. The net effect of the trading activity will go from the trading account to the profit and loss account. And here we will add all other expenses, including the freight outwards, which we are paying for delivery. That also we will take here and everything. We will compute the net effect of the profit and loss account also. And that will be the profit or loss of our enterprise. Now, the third thing is showing the assets and liabilities of our entity. That is called the balance sheet. And the balance sheet will also contain the net effect of the profit and loss account. Got it? Balance sheet will also contain the net effect of the profit and loss account, and it will contain all other assets and liabilities, including the owner's capital. The owner's capital, where will this profit go? It will naturally go to the owner. I have already told you this will go to the owner in the business process. So naturally it will be added to the capital. Yes or no? Added or subtracted, as the case may be. Therefore, it will be going to the balance sheet. These were the main three items we prepare in the final accounts. So these three are the main first basic three steps of accounting, and this is the interpretation of the results of accounting. So I hope you have understood what we have to go from now on. The accounting equation was only a basic just to make you understand clearly how the thing is balanced, why it should be balanced, But it's basically understanding. In practical, we never use the accounting equation. Basically, the step starts from only the journal. So from next session onwards, we are going to the practical aspect of accounting. I hope you will be coming prepared and revised on this session. So this is all for today. First, we learned about the journal, and then the grouping is done in the book called Ledger. The journal has many subsidiary books also. We learned about them. Then we gone to the ledger. The classification work is done in the ledger. Then we came to the trial balance. It is the statement showing summarizing the effect of the ledger. And then we came to the final accounts, which are three parts, and it shows it depicts or interprets the results of accounting information and shows us the profit or loss as well as our financial position on at the year generally, or when our the date may be. So this will be for today. I hope you enjoyed it. Have a great time, and don't forget to revise these things. From the next session, we are entering a very important part. So till then, have a great time. Bye bye.